This concept allows you to trade the daily, weekly, and monthly range with the highest level of precision. Basically, what this means is that if you are looking to time your entries with the highest level of precision, then this is the knowledge that you need to acquire before you can reach your goal, right? I won't ask you to subscribe, I won't ask you to like, but if you find value, let's get into it. Open, low, high, close. A bullish candlestick. It opens at the bottom, creates a low, impulses higher, creates a high, and then closes below, right? A bearish candle, same concept. The bar opens right here, creates the high, impulses down, creates the low, then eventually closes just above the low. Every time you hear me say bullish candlestick, I'm referring to this acronym. Every time you hear me say bearish candlestick, I'm referring to this acronym, just because I don't want to say open, high, low, close, open, low, high, close all the time, because it's kind of hectic, right? I've showed you the basic structure of a candlestick, and now we're going to look at the daily direction. We use the daily chart as a catalyst to determine bullish and bearish. When we can identify the next market move on the daily, everything else becomes clear. The first thing we need to identify is if the daily candle will be an up-closed candle or if it will be a down-closed candle. The way in which we can identify this is by the use of PD arrays. I will get to PD arrays in a second. What I want you to pay attention to is this diagram right here and relate what I am talking about to what you can see, right? The market moves in a range from premium to discount and from discount to premium. Therefore, if we are expecting an up-closed candle, then we would want to see price reacting from a discount daily PD array and trading towards a daily 4-hour premium PD array. What does this mean? If we are expecting price to be bullish on a given day, then we would want to see price reacting from a discount PD array into a premium PD array. And these PD arrays could be on the daily time frame or on the 4-hour time frame. If you want to get the most, if you want to make a change in your life, then you have to take action. And the best action you could take right now while watching this video is getting a notepad, getting a pen, take notes of what you are learning. Otherwise, you're just wasting your time, bro. I'm telling you. So from the daily direction, we go to the London Protraction. Another way to anticipate the daily bullish and bearish candlestick is by understanding and implementing the logic of the London Protraction. This is the London Protraction in a bullish candlestick, and this is the London Protraction in a bearish candlestick, right? I keep saying right a lot, I don't know why, but I see. So the London Protraction is the time in price action where the market, or IPDA, makes a force run, creating manipulation in the daily candle. The London Protraction is a force run or a Judas swing that creates manipulation in the daily candlestick. Price in a bullish candlestick opens right here and creates this low before creating the main body. So this is a fake move. designed to trap traders, designed to liquidate positions, and designed for institutions to enter at the best prices possible. So if you understand this trading model, then you're going to have price working in your favor whenever you're trading, because you understand how it moves, you understand its movement. Am I making sense? Type shit. If we are bullish and the previous day we tested a daily discount PDRA, we would be expecting the following day to be a bullish up close. Therefore, we would be expecting very little movement below the opening price. That is the lower wick, that is the London Protraction, that is the manipulation. So either we use this to enter at the best prices possible, or we use it to avoid dangerous price zones. Do you understand what I'm saying? If you look at your charts using the New York local time, which is UTC -4, then you're going to mark out the different trading sessions, and you're going to notice that the London Protraction is what usually creates the initial move of the day before price creates the main body, which is usually during New York, and then closes right there, right? So from the London Protraction, we come to the daily range. These are two candlesticks. This is a bullish candlestick. This is a bearish candlestick. This is a main body. This is a main body. These are two candlesticks without their wicks. Our goal as traders is to capture majority of the trading range, meaning the open to the close, the open to the close. That is the daily range, and our goal as traders is to capture the majority of this move. We are not interested in the high or the low when looking at the daily range. We are not interested in the wicks. Using the daily chart, we are able to define the range that we want to be trading with a lot more precision than not. From the daily range, we go to Fractal Bearish. Inside one daily candle, this is a daily candlestick. Inside one daily candle, we have 6, 1, 2, 3, 4, 5, 6 4-hour candlesticks. Inside one daily candle, we have 6 4-hour candlesticks. This is what is called the 4-hour fractal, meaning when I say 4-hour fractal, I mean the 6 candlesticks that are within the daily candlestick. Does that make sense? Using what we know about bearish, we can come to the conclusion that there are fractals, just like there are fractals for everything else in trading, meaning everything that happens on one time frame happens on another time frame. Everything that happens on one time frame happens on another time frame. Everything is the same. Nothing changes. Everything is the same. Everything is one. You need to understand that. And when you understand that, you put the odds of success in your favor. Alright. Inside a daily bearish bar, we can drop down to the 4-hour chart and see the relationship with the daily and the 4-hour chart. So that is the diagram that is illustrated here, showing the relationship between the daily candlestick and the 4-hour candlesticks, which is the 4-hour fractal. Understanding how these bars are printed on the charts can help you take your trading career to the next level. Fractal bullish, same thing as the fractal bearish. We have 6 candlesticks on the 4-hour time frame that are within one daily candlestick. This is where we identify the relationship between the higher time frame bars and mid-lower time frame bars. Everything in price is fractal. In one larger bullish bar, there are multiple bullish and bearish bars. The most important part of any candlestick is the opening price. We do not need to try to predict where the market is going to close. We do not try to predict where the market is going to create the high. We do not try to predict any of that. We are just interested in the opening price. Once we understand how to frame our day based on the opening price, we will have a method to finding high probability trade setups on a consistent basis. Excuse that spelling. I dropped out of school. From the fractals, go to the monthly direction. Just as we have the daily bullish and bearish bar, it is the same framework we can use for a monthly bar. The points remain the same. The only thing changed is the time frame. The candlesticks on the monthly are the same as the candlesticks on the daily. The only thing that changes is that we are changing the time frame. Every month, every trader should be aware of where they are in terms of the monthly bar opening price. You should know your entry. You should know where price is going so you can capitalize on a long-term basis. And if you are a scalper, you can do that on a daily basis. You can be trading every day, making money. The monthly bar is the catalyst for your whole month of trading, and understanding where it is likely to expand is essential. When trading the monthly bullish or bearish bar, we want to be sellers above the opening price, and we want to be buyers below the opening price when bullish. So from the monthly, come down to the weekly, and that is the weekly incorporation. The weekly incorporation, just like any other fractal, what we talked about before, about one candlestick having multiple candlesticks within it in the lower time frame, we can incorporate the weekly into the monthly. Within a single monthly candlestick, there are 4 weekly bars making up that single candlestick. So in a month, we have 4 weeks, right? Meaning we have 4 candlesticks making up one monthly candlestick. Moving from a higher time frame PDRA, moving from a higher time frame PDRA into a higher time frame, moving from a discount PDRA into a premium, Once we trade into a discount monthly or weekly PDRA, we can expect the weekly to print bullish weekly candles until premium higher time frame PDRA is hit. So once taps into a discount PDRA, we can expect bullish candlesticks until price taps into a premium PDRA. When the weekly time frame confirms the direction, the monthly bar follows. If you want a tutorial on PDRAs, then leave a comment down below and I'll drop a video on that. Make sure to hit that like button. Don't forget to subscribe and turn on post notifications so you can get notified each time I post a new video. It's your boy OMG Pips signing out.
And remember, in Forex we're talking about, we came in this game for money. We came in this game to earn a living. So we are not here to play games.